Um, Thank you so much for being here. I heard there was a party last night, so hopefully everybody got drunk and it's ready to listen to this talk. So today I'm going to be talking about investing in Web3 and investing in general. So give you a little bit background. I started my company and my career by hacking into Snapchat. I hacked into Snapchat and allowed some of the biggest publishers in the world, like GQ Magazine, Condé Nast, Time, a lot of sports companies like NFL and NBA, to upload really good content directly to our platform onto Snapchat. And what happened is it got the attention of some of the biggest names in the VCs because we're growing really fast. We did not wanted their money. And one thing I realized is that when you want money, you don't get it. And when you are getting money, you don't need it. So within that, what we wanted was to actually learn from other people. And at the time, we wanted to get into some of the biggest accelerators and incubators in the world. We applied to mostly all of them and got into mostly all of them, including 500 tech stars, and we ended up going to 500 startups. Surprisingly, my co-founder at the time just got engaged to his girlfriend, and as soon as he put the ring on, he said, "Bye-bye, I'm going to California." So we took our car, we went to California. While I was there, one of the partners asked me to help run the program. So kind of like if you go into accelerators, you see a bunch of programs. And what they do, if you haven't heard about 500, they are one of the largest seed stage investors with 50 plus unicorns to date. And I was skeptical at first. I was like, I don't know if it's going to be for me. But I tried it and I loved it so much. I loved working with founders. So the next part of my career, I spent building up ecosystems all across Asia and the CIS region, in Korea, Kazakhstan, Azerbaijan, and tons like Georgia, and tons of these other locations. And to date, I worked with over 800 plus startups. And what that did for me is allowed me to build pattern recognition, right? So if you start working with a lot of companies, you see what's working, what's not working, what do the founders need, where the drop-offs are happening, and what do we need to do. Using that knowledge, I was like, let me invest in a few companies because I want to put my skin in the game and see if I can make really good bets. To my surprise, we were able to invest in 3 unicorns and a few about to be unicorns. And at that time, I was deciding if I should go into venture capital, start my own firm, because I've proven it out for myself, and I wanted to prove it out for others. Upland reached out to me. So if you guys don't know, Upland is one of the largest NFT metaverse. So if you're looking at Decentraland or Sandbox, we have more land sold, even with those two combined. Another interesting fact is that we have more NFT holders than any other platform. So even if you're looking at OpenSea, we have more people that own NFTs and they're first-time NFT holders than any other platform. So my job was to make sure that people that are coming into the platform are getting addicted and having withdrawal symptoms. So every time you're going onto your Instagram or Tinder and you keep opening up their ad, is probably because there's someone behind the scenes, a guy like me, that's making that happen. So whenever we're looking into companies, I have a unique privilege because I can see startups from the founder's lens, from the mentor's lens, as well as from the lens of an investor. So when I'm looking at companies, I can see like every side of the cycle. Traditionally, if you look at other VCs, they're either coming from just being a traditional VC, or some people are investing and just have been really good founders and they have exited and they have the capital to invest. This year we'll be investing from 2080 into 15 plus companies from our Korea fund. And with that said, I'd like to pass along some knowledge. I'm by no means an expert. I'm learning on the go. I think anybody who claims to be expert is lying, right? I have that philosophy is like you're building the train track as it's going. So we're all learning here. So one of the things I learned is whenever you're thinking about creating a startup or creating a company, think in terms of platforms, right? What are platforms? If you're looking at, yeah, it's like think about platform, right? Anything that allows you to build on top is a platform and more likely has the potential to be a unicorn. So if you look at traditional sense, right, when Microsoft came out and the personal computer revolution happened, it allowed people to build software. So you saw like companies like Adobe, Salesforce, and Zoom come in, build software, and they became unicorns. When platforms such as iOS came out, it allowed people like Travis to build Uber. It allowed WhatsApp to happen, Instacart to happen. Same thing with Android. We saw like a huge rise in social media companies like Snapchat or Instagram, TikTok, DoorDash, and there's a bunch of these happening all across the world. And that's whenever we're looking at what are the things that are allowing people to build on top. So whenever we're looking at Web3 companies, there's a lot of like Ethereum allows you to build on top. There's tons of other things. But besides blockchain, let's look at the metaverse, right? To give you an example, if you're looking at Upland, Upland is considered to be a super app, right? It's a huge map of the world based on real world where people can buy buildings. And once you go inside the building, you can build your own experiences using the SDK, right? So there's like a simple example of like what people could do in terms of platform. And it becomes a super app, right? Like people can come in, create their own worlds, and really allow other people to create experiences on top. And what happens is a lot of times when we're creating companies, right, we're doing marketing ourselves. But what happens if you allow people to do the exact opposite is like help them build on your platform, they will do the marketing for you, right? So it's kind of like influencer marketing in that way is like if people build, they will get other people to come in as well. Another company that I'm helping right now is called Arena Games, super young. But the philosophy is the same, right? It's a Web3 company. It's kind of like Netflix for Web3 games, right? You can take any traditional Web2 company, use their SDK, and build on the platform. And there are tons of like really good features, right? So you can take the tokens and move into other games. You can take the points and move into other games. You can move around the NFTs. Same concept here, right? Very simple. Like allow people to build on top of your platform, and more than likely you are creating a great company. Another simple thing is eat your own dog food, right? Like not a lot of people know about this, but the concept is like if you don't like your own shit, nobody will like it, honestly, right? So whenever I'm teaching people, create content or create a blog, the first question people always ask me is like, how many words should there be? How big the article should be? It's like, it doesn't matter. If you're writing good crap, people will read it, regardless of numbers and counts, right? So make it interactive. At the end of the day, if you enjoy your stuff, more than likely other people will enjoy it too. Same goes for your products, right? If you're making videos, if you're making games, if you're liking it, everybody else will like it. So I'll give you an example, right? Like, I think a few years back, I was investing heavily in the Asian region, and I had a call with one of the VCs, and we got on a call, and one thing led to another, and he said, "Have you invested in this company?" And I was like, "Yes." And I was like, "How have you invested in this company?" I was like, "I just liked the product. It was good." So it's like, "How? What did you look into it?" I was like, "I just like the game." He's like, "We did a 10-point check. We did all this due diligence. We talked to these people, blah, 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 blah." I was like, "Okay, great." But the result was the same. We invested in both great companies. We came to the same conclusion. And you need to realize at early stage, right, it's all about the team and it's all about the people who can build. If you like the product, that's it. That's most of my investment philosophy. If people can build and they build a great product, I like using it. More than likely, everybody else will like using it. Also, one of the philosophies at 2080 we realize is that we don't want to invest in companies that we cannot help grow, right? So like medical companies or hard tech companies that we have no knowledge about or we cannot get knowledge about, we're not going to touch it because we do not know how to pull the levers, right? So like the philosophy is like if I do some inputs here, there are going to be some outputs here, right? If I cannot control the inputs, they're more than likely I cannot control the outputs of the company. Yeah. Community is super important, right? So one of the things I tell a lot of people is if you're a non-tech person, if you don't know how to build, but you're curious about building something, start by building a community. And community can come in many forms, right? You can start by creating a blog, create an article, creating a following. Same thing with YouTube, right? It's all about consistency and doing it day in and day out. And that's what you'll see, right? A lot of the Web3 companies, when we're investing in them, if they don't have product, they're yet to launch, they're yet to release their tokens. What we're really looking is like how fast they're growing their communities, right? Discord, what are they doing on Instagram? What are they doing on their Reddit channels? What are they doing on their YouTube channels? Anything that goes to community and how fast that number is growing, more than likely, they will be able to monetize later if they can build a product, right? So who remembers this, right? I remember when Kylie Jenner came out, and she was on the cover of Forbes magazine, and she claimed to be self-made billionaire. I was shocked. I was like, how is this self-made? But how did Kylie Jenner become a billionaire, right? I was really shocked. But I remember something. She has a huge following on Instagram, right? If you have a huge following, you can literally be one of these people, right? You can see traditional actors really launching great companies, right? With Kylie, with her makeup line, Dwayne Johnson with his tequila brand, Honest Company, Mint Mobile just exited for $1 billion, and Ryan Reynolds will literally put out short videos on TikTok and everything else. They were able to do that because they have a community, right? So whenever you're writing books or whenever you're doing something, you can easily get a book writing contract from Wiley or Penguin if people look at your following. They know you can sell the book. It's not that hard. Same thing when Upland launched their book. It was literally because we had somebody in our team that had a huge following. So we were able to release that book with a Wiley contract, right? So build that following. If you're not technical, I believe everybody in this room can and has the ability to build a following. How fast is that community growing? And you can monetize that later, right? So again, these are the channels, right? Like, what are they doing to engage the community? What are they doing to engage the community on Reddit, on Discord, Twitter, Instagram? These things are super important. In the early stages, that's all you're looking at. And what happens, and what's the beautiful thing about having these communities, is whenever you're launching beta products or testing service, you can always launch within these communities in a closed group. And these people will be the first people to give you honest feedback about how the product is doing, right? These are the people who are going to make and break your products, so nurture your communities really well. And we can literally see the Discord channels and how people are monitoring them. And I always say, one of the first hires you should always have in your company is that somebody, if you're growing a community, who can monitor the community, right? Make sure they're engaged, make sure they're not getting angry, all the questions are answered. You're helping the community getting engaged in everything you could do, right? Here, let's be honest, right? Like, market's down, and that's the truth, right? Like, internally within the company, we saw that as well. Everybody's out. But it's a good thing for us, right? Why is it a good thing? Because kings are made when markets are down, right? So if you're looking into when we were advertising, NFTs and PFPs have become P2 play to earn have become bad words, right? People do not want to do it. Anytime now that we're looking at partnerships and we say NFTs, people don't want to do it. They don't want to be associated with it. They don't want their names on it. If you're marketing with P2E, like even trying to get ad dollars on there, platforms will block you from running ads, right? It's become that bad. And yeah, so there are even some countries that block, right? So if you go to Korea and you say, like, I want to launch P2E games, you cannot launch it. It's not allowed. So now's the time, right? Now is the time to pick strong companies at lower valuations, especially in a VC. But if you can survive this and you can grow this market out, it literally means you create a resilient company, right? You have come out of this as a winner, right? Where everybody else is struggling and there's blood on the streets. Um, Here's the thing, I'll tell you. Investors think they're mavericks. Everybody thinks they're original. Oh, I'm gonna do this, I'm original, I'm different than everybody. But the reality is that most investors have herd mentality of being comfortable. They're very comfortable because they know they can follow on. They're not leading, right? And anytime you go raise funding, they'll say, go find the lead or go this, go do that, then we'll invest, right? It's just another excuse because they're comfortable. Very rarely you'll get the chance where an investor writes your first check. So at 2080, we write our checks from 100K to $500,000. If you like your product, no questions asked, like if you had a lead or not. That's it. Um, but again, it's all about nowadays. It's all about AI, right? Why? Because of ChatGPT. Everybody saw the success what ChatGPT can do, and then everybody starts come rushing in, right? And you could see this a few years back. There were so many companies going to VCs and saying, "I have an AI startup. I have an AI this. I have an AI that," and nobody will blink an eye. Now all those companies are getting invested, right? Before that, it was Web3 companies, and everybody was getting invested. So that just shows you like how people have herd mentality. Nvidia stock went up the roof with all-time high. So that's the trends, right? And the reason why I'm mentioning this is you need to learn how to ride the wave, right? Kings are made by riding the wave to the top. That's how we became so really big when I started my company, because the Snapchat wave was happening and everybody was trying to get on the Snapchat bandwagon, right? And all I had to do was send one email. It's like, I have a platform that allows you to upload content onto Snapchat. And I could say, I'm not gonna take $3,000 a month. I'm gonna take $5,000 to $6,000 a month. I had that power. Uh, and having that power is really beautiful because it's like standing in a room with a bunch of people and suddenly you became the most gorgeous man or gorgeous girl. Everybody wants to talk to you. And it's very beautiful. So that's where you want to be. Learn to ride the waves, right? So if you are looking at where kings are made and queens, that's where they're made, right? So when the personal computer revolution happened, you could see Bill Gates and Steve Jobs rise to the top with Microsoft and Apple. When the internet boom happened, you saw people like Elon Musk with X.com and then later PayPal, Larry and Sergey with Google, and Jeff Bezos with Amazon. When the iOS apps opened up, you saw new kings come to the market, right? And those guys were Travis with Uber, the founder of Instagram, the founder of Bumble, and now that AI is happening and the Web3 is happening, you could see, people like Sam and Vitalik. So now's the time, right? You're at the right place, right time to build a company and ride the wave to the top, right? I think it's going to take a few years, but it's going to be right here in this industry, either AI or blockchain or Web3, whatever that is. Other thing to keep in mind is retention is super important. Whenever we're looking into companies, we are looking at how are they retaining people? Are people engaged? Are they leaving the platform? And that's what you need to actually think about. You work so hard to get people into the product and into your platform, and then they get bored and they leave, right? It becomes really hard and horrible because you spent all this time. What you need to do is run experiments, right? Run experiments in terms of what we're seeing. So what we're seeing is like, run experiments, right? Like launch collection, launch tournaments, just do new things and keep running that over and over. Popular metaverse, so we also saw this as like if you're looking at popular metaverse games, right? A lot of brands and partnerships were happening. Every day was another announcement, but it's not happening anymore, right? And what brands seem to realize is that when they were doing these partnerships, what they were just getting was eyeballs, and there was no conversion or action after, right? You built this amazing land like PepsiCo, and everybody comes in, and that's it, right? It's not driving sales to the product. It's not driving visitors to their website. It's not doing anything, right? So brands were like, okay, this is a great PR lead. We're just gonna do it one time, and that's it, right? And the reason why brands do it one time is because in their monthly, yearly budgets, they have money to put on these type of exercises, right? Real money comes from brands and partnerships where they can see repeatable stuff happening again and again, right? You will get the first deal, but you're not going to get the second one, right? That's why so many companies, you can get the seed, but you cannot go beyond Series B, right? Same thing with Netflix. If you have a Netflix show, you'll probably get to a second season, but they won't renew you after the second season. The same concept is here. You can get people in for a little bit, but they're not going to stay there for a long time if you do not show results, right? Um, Again, one of the questions we ask ourselves is when we're looking at Web3 games, the life cycle of Web3 games, right? It's just like Web2, right? How much I'm going to play GTA 1, right, before GTA 5 comes out. Casual games, if you look at it, it's 1 to 5 weeks. On the other hand, like if you are like a mid-core game, it's sometimes 12 months. But that's it. That's the life cycle of any Web3 game or product like that. Same thing goes here. Like Web2 games are no different than Web3 games if they're not engaging. You could do all this stuff and shebang, but people are going to leave. And we could see that with Axis, even though my friend invested in it. All right, acquisition. Another thing to think about is acquisition. Right? Whenever we're looking at companies, we're asking the question, are they paid user? What is their CAC, right? If they're only getting paid, if you're only getting paid users, it becomes super dangerous, right? So paid users, like when you're running ads, you're spending money to get users. To give you an example, there's one of the companies in Silicon Valley that got funded by really big brand names like Excel Partners and so forth. What they were doing is providing shoe subscription boxes, right? So you sign up and you'll get a box of shoes for like $30 per month, right? You get the shoes in your house and you wear them, and they were losing a shit amount of money, a shit ton of money, and they couldn't figure out why they were losing money. And by the time they figured out, it was too late. The problem is that they needed to sell 3 shoe boxes. That means have people subscription for up to 3 months to become profitable. But what people were doing is buying the subscription for only 1 month and canceling after, right? And that could be really big issues when you're looking at companies like that. The other thing is organic growth, right? Are people bringing in other people, right? Great products will always have some sort of organic growth. And what are people doing to nurture that? See where the users are coming from. Again, think about platforms, right? All the traffic and all the people and all the customers you're looking for already exist somewhere. And what you're doing is stealing customers from one platform to another, right? So like think about how can you steal people from Instagram? How can you steal people from Pinterest? How can you steal people from Google, right, with SEO? All you're doing is like what platform you're going to steal your users from, right? And whenever we talk about experimentation, you need to realize 80% of your users are going to come from mostly one platform. And 20% you're going to be experimenting with other channels, right? So you'll have one strong thing versus not. The other thing about paid is paid can easily be copied, right? If you're into a market, anybody can come in and run the same ads you're running, but nobody can copy organic because it takes time to build. It takes effort to build. If you're doing SEO, it literally takes 8 months to build it, right? If you are into B2B, you have those connections, and there's the relationships that are built out during the years. And whenever you see acquisition happen, there are 3 types of companies that are being acquired. One, you're being acquired for your talent, which is acqui-hire, right? We're acquiring you because you have really good talent. 2, you have a really good product and IP, and we want to integrate that into our platform or our ecosystem. And the last one is you have the users, and that's where the biggest acquisitions happen, right? We want those users because we cannot get them, or it will take us a lot of money to get them, right? So whenever you think about building a product, you need to think about acquisition because why else are you doing this, right? What's the point? I'm gonna spend 8 to 10 years on any business for my life. Yes.
You're a company that actually selling talent. What kind of contract or business model you need to have to make sure that that talent, once you're sold, does not leave? What type of business is that typically?
I mean, it comes in different business, right? Like, to give you an example, one of the acquisition Travis was doing, Travis Kalanick, he started cloud kitchens in Korea. And what those cloud kitchens had was like a lot of operators, right? So there were other competitors who had operators who were running the competition, and he wanted that type of talent, right? So it depends on business by business what you're creating, right? So if somebody is creating like really good AI company and has a really good AI model that works because you've spent a lot of money training the data, great. I want that data because it's gonna take me a lot of time to train, and those people are hard to come by, right? So again, it's different. But once you sell the company, it's not your problem, right?
I understand, but does the investor on the other side look for a specific type of contract that would bind the talent to stay for at least, I don't know how
Yeah,
long?
yeah. So that's what's called, right? So uh, I don't think you can legally bind people,
But
right?
you can make it contractual.
Yeah, you can like make it like give equity on a certain stage or a certain time. Is like okay, you're not gonna get vested, right? Right. And that's one way. The other way is like whenever you're acquiring a company, you say it's pretty much golden handcuffs, right? So the leadership is asked to stay. It's like if I'm gonna invest in you, the contract is you have to stay within the company for 2 years and make sure it gets integrated. So you get stock or cash or whatever that deal is, and then you have to stay for 2 years. Great question. Yeah, so that's what you're really looking at, right? Do they have a product lead in the group, right? Do they have viral loops built in? Are they experimenting fast enough? Are they data driven, right? Everybody claims to be data driven, but nobody's actually doing it on a weekly and daily basis. So one of the things I look at is if people really have a television in their office or in their room that has all the numbers showing up, like a clock, and you're walking in and you're looking at those numbers and you're driving your team by that number, right? And when you're running your companies and your team, you need to have a number assigned to each person. And the famous question you should be asking is, what did you get done this week? How did you move the needle, right? And that's the question you should be asking yourself. What did you do this week within the company that moved my net metrics forward? If it didn't move my metrics forward, why did it fail, right? And it's okay to fail, but not having an answer to why something not worked is a problem, right? Great. Let's move forward. Uh, who is building the product, right? One of the things we realize is that people who outsource their development, it becomes a money pit. You lose money. If you cannot build, it's going to be a money pit. So like at 2080 and other most prominent VCs, the most fundamental things we look for, can the people build? If it's being outsourced, it's not a good sign, right? Because people that are working there are literally looking to maximize their dollar amounts. They're looking to maximize because they know it's short term. Once it's built, they're gonna be going somewhere else, right? So you need to look out for yourself, learn how to build, or get a CTO that could build, right? And when I say CTO, a CTO that can build, not manage a team, right? Sometimes people get CTOs like, I'll manage the team for you, but in the early days, that's not what you want. You need somebody who can build, right? Managing the team, and they're like, give me money, I'll manage the team for you. It's not the right way, right? So learn how that whole process works on building the product. Um, yeah, and the other thing is you cannot iterate fast enough, right? Like I always look at is like how often are you running sprints, right? Every week are you launching something new? Are you experimenting with something new? There's sometimes companies who are experimenting twice a week, right? But that company is always going to lose uh, compared to company that is launching once a week, right? And that's the reason why Facebook won over Snapchat, is because they did not care about anything else. It was all about running experiments and seeing what's working. And if you look at like some of the greatest restaurants in the world, right? El Bulli, where some of the famous chefs came from, now they are out in the world and creating Michelin star restaurants. If you watch Netflix Chef Table, more than half the cast came from El Bulli. And what's remarkable about El Bulli is that the first restaurant to experiment, they had their own lab. They were experimenting with food and taste and lighting and smells, and that's what made it really great, right? So that's the philosophy we should be having internally, is how fast can we iterate and launch great products, all right? Um, with that said, I think I'll open it up for people to have who have any questions about what investors look for, like how do you take investment philosophy, what are the trends? Yeah, so if anybody has questions, and please add me on LinkedIn or send me an email if you guys want to chat about anything. Thank you.
So if I understood correctly, forgive me if I didn't, you had a service-based business and then you moved on. Hi. Is it okay now? Okay. So if I understood you correctly, sorry if I didn't, you had a service-based business that relied on Snapchat, and then you later moved to be an angel investor or
Yeah,
to be a
so
VC.
that's a great question. So we did not have a service-based business. We had a software. So what we did is we hacked Snapchat and we allowed some of the biggest publishers to just upload content. So think about like traditionally, people had to use their cell phones to upload their content, right? And that's a no-no for big publishers. Um, and with the iPhone, it looks great because you are using your camera. But if you had an Android, because there's so many versions of Android all across the world, what literally Snapchat did, they were recording your screen. They were not even using the camera. So that's how they got that workaround for uploading content, right? I remember waking up in the morning and seeing like a really good cooking channel that Snapchat had a discovery side. And I was like, I want to wake up every day and watch really good content, but there's only a few channels. So a lot of other people got desperate. They wanted the same thing.
So thank you for that. I have a follow-up question.
Yeah.
You because you're building an existing platform right now.
Right.
The trend is having a tool that will help you enable similar thing on LinkedIn. My profile on LinkedIn is stronger, so I monitor it. Is it, considering that companies are getting faster and faster, is it actually risky? And what are the risks of you relying on a platform like that before they just introduce a feature
Right.
that kills you overnight?
That's a good thing. So that's what happened to us. We got killed by Snapchat. So as soon as GQ magazine launched the Kim Kardashian's magazine cover using our platform, they blocked LinkedIn and they blocked our platform. And they were not allowing people to build on top, right? It becomes dangerous. But it is safe to build on platform that allows you to build on top, right? It's like simply like Ethereum or Polygon or whatever you're looking at these chains, they do allow you to build on top.
So did you anticipate this happening, and did you accumulate money so you can shift, or was it a surprise to you that really?
We saw it happening, but we choose to ignore the warnings. Every VC was saying you're gonna get shut down. It's scary, and we were in our own delusion. We were like, no, it's not gonna happen. And the reason why we were in this delusion is because if you guys know Giphy, by any chance, there's little GIFs on Facebook. So like, good friend of mine who launched Giphy, Facebook wasn't allowing that to happen at first, but he made it happen. So Facebook did open it up and allowed GIFs to come into the platform. And same thing happened with YouTube, right? So there are a lot of people who were running advertisement platforms on top of YouTube. YouTube was not allowing it, but then YouTube opened up the platform to allow people to build in. And the same thing happened with Facebook. So we thought that Snapchat would open it up, but they didn't. So that's one of the reasons why they also failed, is because people were really looking to build on top, but they did not allow people to build on top.
Hi, one short question. Due to your experience with startups, In which stage of development for startup is best to apply for some investment? Do its product design or developing ideas, proof of concept, MVPs, prototype to have to apply some investment?
Yeah, that's a great question, right? So like the question is like, what stage do we look into in general? What people are looking at? I think like have some sort of traction in this market. Like now that people are not looking into like idea-based companies, at least have like if you have a SaaS company, um, $8,000 in monthly recurring revenue, or you can show growth, right? So one of the important things you could do to any VC is like show your growth trajectory, right? Do you guys know the number you need to be growing on a weekly basis? Does anybody know what's the percentage you need to grow your company on a weekly basis? Anyone? What? Yeah, that's right. That's 5 to 10%, right? So if you're growing your any KPI by 5 to 10%, then you could show that in a chart. That's the number you need to be going after. And it's just as simple, right? There have been VCs that just look at product. So when I was fundraising, people were just asking me like, give me your login, and if I like your shit, I'll invest. It was that simple.
Hey, thanks for the brilliant talk on investing. And my question would be, are there any specifics related to Web3 investing other than gaming that you touched? So
Sorry?
are there any specifics to investing into Web3 projects?
No, there's no specifics. I think it's just, besides what I covered, it's pretty much that it. Yeah, it's like the product is good, the community is there. If you're seeing traction, it's that simple. Hopefully that answered your question.
Thank you.
I think you want to do one more, I guess.
Yeah,
Last one?
we can do a quick one.
Last one.
Thank you for the nice presentation. I have one question. You said you're looking for teams that iterate fast and make fast new features. But for me, there is always a struggle between quantity and quality. So is there like some sweet spot there, or is it maybe
Yeah.
to like take 2 weeks but make it really good, or
Right.
make it little less time but go faster?
Yeah, that's a good question. Right, I think internally we use something called experiment worksheet, and what that allows you to do is like score your company based on cost, time, and ease. Like, what is the cost is going to take me to do it? So, for example, if you're a startup and I want to go to an event that's going to be costing me $3,000 to set up a booth, I have to fly all the way down and print material. That's really expensive. But if I can post some questions on Quora and do that, that's pretty cheap, right? That's cost-wise. And time-wise, is that like it's going to take you 3 months of planning to an event versus Quora, you could do it in a week. I don't think there's a specific number, right? If you are just showing you can experiment and doing faster experimentation on a weekly basis, that's all that matters. I don't think anyone's going to drill down and see like, oh, how many experiments you're doing. But as long as you could show that, yeah. Okay.
Thank you for the many questions. Be sure to catch up with Timur. He is here at the conference. And yeah, we're going to have our next talk pretty soon. Thank you.
Thank you so much for being here. Really appreciate it. Thank you.